Hi everybody, welcome back to my channel. This is Oliver Wiedmaier with Voyage Trading Group. Today we're going to go over a bunch of charts and look at when the start of the swing occurred, when good entry points would be, when good sell points would be, and we're going to look at how to find when stocks are breaking out. So what we're basically going to do is just go through multiple examples of past winners and just go over when we think the best entry would have been. I have a filter here for this is scanning stocks that are up 30% in 1 month, and we're going to go through and we're going to see how we could have found this stock. So, for example, this stock had earnings here, and it kind of traded sideways. Nice momentum move here. Then it pulls in, and then it has this big rip. So how can we trade this? This is something that is how you make money. So the proper entry would be either this one or this day. And so this stock moved $3, 17% right here. If we look to the left side of the chart, it traded sideways, had some forward momentum, and then traded sideways. 3 down days, and then the big move up. So if your scanner was set to finding $1 breakout, then this stock would have showed up somewhere around, let's see, it moved up $3, so somewhere around here. And then you could have bought it from here. Buying it here, you're buying it late. Buying it here, you're buying it late. So if you miss it here, perhaps you would find it on a scanner. I like to use a 1 week 20% scanner. So this would have showed up on the scanner, and then you could have put it on the watch list. And then when it made this move here, you could have entered here, because this, again, makes a $1.30 move. So this would have showed up on your $1 breakout scanner. And then once this hits the scanner, you look left, you see that it's tight, and then it makes this move here. And so right there would have been your entry, and you could have made 37% move. So this is a perfect example of a momentum burst with a pullback and then the start of a new swing right here. So you can either make the trade here or make the trade here. Anywhere else is not a good trade. Okay, moving on. We want to look at REX. No entries to be found here. It makes this big gap up, then fades down. No entry here. It is trading sideways here, so if this continues to move sideways and tighten up a little bit, if you see a dollar breakout, perhaps that would be a decent entry. Okay, we'll look at more examples. This is a decent move here. So again, you have this momentum here, and you have a pullback. Then you have the big breakout here. So this is, again, this is a $1.33 breakout. So this candle here would have showed up on your $1 breakout that you would be scanning intraday. Let's see if this would have been on your 20%. Yep, this would have been on your 20% watch list already. And then you watch it trade sideways, and then you wait for that $20 breakout or that $1 breakout. So let's say you bought it somewhere around here, you would have made a 46% move. So again, we are looking for 20% move, pulls back, and then a $1 breakout. So that is your proper entry here. The entry could have worked here as well. The reason for it is because you have 3-4 days kind of tight here. So let's say this showed up on your intraday scanner. This is a $1.70 breakout. So this would have definitely hit your $1 break or your $1 scanner, your $1 breakout scanner. This shows up on your scanner. Then you look left. You don't focus so much on the left. First, you look at today's candle. Today's candle, does it meet a breakout criteria, which is a $1 criteria? And then you look left. Does it meet your tight action and your linear momentum move here? And it does. So that you could have bought that move there. And then you would have hit your 35% move. Very good. Let's keep looking at some more examples. Nothing too much to see here. So here, this is a decent move. Let's see, that's a $1.68 breakout here. So this would have hit your scanner, and you would have looked left, 2 days tight, linear action here. Let's see, this probably would have hit your, yep, so this would have been on your scanner already. This would have been on your 20% scanner, or on your watch list rather. Pulls in, 2 days tight, which is a criteria. Then the breakout here, so $1 breakout. This would have resulted you 34% move. So you see the common theme here. We are looking for stocks that make a 20% greater move in a week. Pulls in, a couple days tight, and then a $1 breakout here. Let's keep going here. So this is a great example again. You have your 37% move, very tight action here, and then you have this is a $3 breakout. So it would have hit your $1 breakout somewhere here. You would have looked left. You would have saw 2 days tight, which is a requirement, and then the 20% in a week criteria here. Then you would have bought that, and then you could have made 20%. So again, all of these things, buying it here or buying it, let's say it makes this move here. You have this move here, big EP people call it. You got this big gap up on earnings, your earnings gap. Let's say you bought it here. It still would have worked, right? It still would have worked. You still could have made 12% or so. But that's not the start of the new swing. That is the point of the video I'm trying to make, is finding the start of the new swings, not necessarily finding entries that can work. It's finding the start of a new swing. So for example, here, right, it pulls in, you have some tight closes here, and then it has this breakout. But you see, this is a 50-cent breakout. I only want to trade $1 breakouts that are making range expansion, right? So if this is a 7-cent move, this is a 6-cent move, and then you have this 50-cent move, you are having some range expansion, but you're not having that big range expansion that's causing the momentum. Perhaps that's something like this, which is a $3 move. This is a $1.80 move. This is a $3 move, and it's starting the new swing. Okay, we keep on going down our list. GCT here. Okay, so this is a decent momentum burst here. However, that's not exactly what I'm interested in. I prefer a more of a shallow pullback. But again, you look at this. This is a $4 breakout. These closes are all 1, 2, 3, 4, 5 closes, right? Kind of tight. Then you get this dollar breakout, 30% move. So this could work, but not something that I would be too interested in. I'm more interested in a little bit of sideways and the pullback, like this move, for example. Okay, so you have these 3 tight closes. Then you got this big $2.48 move. Okay. So let's see. Would this be on? Yep. So this would be on your 20% scan. You have your pullback here. So you could either find this stock one of two ways. This is good. You can either find this stock as you do your daily and weekly scans. You scan for stocks up 20% in a week. Okay, so this would be on your watch list, and then you just be watching for this breakout. Or you scan intraday stocks that are making a $1 breakout. So this would show up. This made a $2 and $2.50 move. So after $1, so 13.20. So it would show up on your scanner 14.20 right here. So this would show up on your scanner, $1 breakout, intraday scanner, and then you look left, right? You go, okay, 1, 2, 3, close, three tight closes. Your linear move here, shallow pullback. I'm gonna buy here. Now it works one day, then it pulls in. Okay, so let's say you have your stop loss at break even. It would not have been triggered, so you would have stayed in here. Okay, if you're playing real tight, maybe you would sell it some here, but generally speaking, your break even stop would not have been hit, and then you could have made 97%. Depending how long you want to hold it, it could have gone 200%. Okay, but most people would have been out way before that. But the idea here is finding these stocks one of two ways. Either finding them based on your nighttime routine, your daily routine, your weekend routine, stocks up 20%. If you're using TradingView, this is the parameters. Price above $3, average volume 300,000, and weekly performance 20. So I'm running this scan every single day, and I am building watch lists of stocks that are making a momentum move, and I'm looking for that tight price action. And then I'm also looking for stocks intraday that are making a dollar breakout. Okay, so I have this set for 90 cents and a 4% change. That's going to give me the best results to in the volume over 100,000, prices over 10, and I want it to be I want the open to be below the price, which means that it is advancing for the day. So that would hit my scanner. I look left, and I would buy. And typically, you either just do low of the day, or you do halfway between where you bought and the low of the day. But typically, low of the day is just fine. Let's just keep on making some more, find some more examples here. This was a great example. CGEM. Okay. So we see here, right, the start of the swing is here. Okay, this is the start of this swing. Okay, and what do we see? We see this is a 96-cent breakout. So this actually would not have hit your dollar breakout. But is it on your, this would be on your week up scanner, right? So this would be on your scanner because it's 7 days, 1, 2, 3, or up here, it would have been on your scanner. So I guess if this was on your scanner here, you could have bought that here. I would not have bought that because this is only 66 cents, not big enough for me. But so this would be on your scanner, right? And then once it hits your breakout here, you'd enter, and then you would trade the move, 73%. Now, if you bought here, would that have worked? Of course, it would have worked. But is that the start of the swing? No. The start of the swing is here. Okay? Buying late in the swing, it can work, but you want to buy the start of the swing. Okay? So that's the difference, is finding the start of the swing. Okay? We'll go through some more. Go through some more examples. Okay. So you have this move here. This is an interesting one, right? Because you have, this would have been 80%. This is not really tight, right? So this is a little bit tight. So this could qualify, right? You wouldn't it's not starting a big move, but you have the 20% criteria here. Here you have a minimum of 2 days tight here, and then you have a $1.93 breakout. So this is a valid breakout. You hit that, and then you would have made close to 17% if you called the top. But again, when did the swing start? The swing started here. Okay, if you bought here, you're not hitting that 2-day tight criteria here. Okay, let's see if we see any other valid entries. This could work here. So let's see. So this is a $1.25 breakout, 2 days tight. Actually, this is 3 days, 4 days tight here. But once again, you have the 20% criteria here, 2 days tight here, and then the $1 breakout. And that would have got you 32%, depending on how long you hold it, 45%. Okay, this would have worked. This would have been just fine. Let's see here. Let's see if it meets the 20% criteria. It would not have hit the 20% criteria, and so this is only a 50-cent breakout. So this would not have been valid for a entry. Okay, moving on. We'll see. We'll get a couple more examples. So this could work here. You have this is a 20-cent. Okay, let's look at this here. 66 cent breakout here. But this is the start of the swing here. Okay. And so let's see here. So you have a almost 20% breakout or momentum burst here. Pulls back. This kind of chops around. So this is not what I would consider tight action. These three seems tight. But then you have this burst to the upside. So this is the start. So if you bought here and you kept it at the stop of the day, the low of the day, it would have worked. Definitely it would have worked. But you don't have these 2 days tight here, right? So that's what I'm looking for. That just helps increase the odds of success, is looking for stocks that have tight action and then expansion to the upside. Okay, so this could have worked too right here. This would have been a nice little move here. You have this big range expansion. Not super tight. I probably would have skipped that. But this move here would have been just fine. And a lot of people would buy this one here, right? So what happens is it shows up on their watch list here after the breakout. And that's not what we're looking for. We're looking for stocks that are breaking out today. We don't want to find stocks that broke out yesterday. If the stock broke out yesterday, then it goes on a watch list to look for the pullback, not for an entry tomorrow. Okay? That's the big difference between real risk management and people who are trading because of FOMO. You see a stock that breaks out, right? This stock breaks out. So now all of a sudden this is on your watch list, where the stock should have been in your watch list because it made a 100% move, right? So it would have made this is when it gets on your stock on your watch list. Is when it makes a 100% move. Then you wait for a pullback. Then you wait for at least minimum 2 days tight, and then the breakout. This is your breakout, and then it goes 120. Okay. Not if you have stocks, if your system puts this on your watch list for you a buy the next day, you have a terrible system and you're not a swing trader who uses proper risk management and tight entries. Okay, you are looking for stocks that are making a 20% move, pulls back, 2 days tight minimum, and then your breakout. Okay, so this should have been on your watch list. You could have either bought it on this candle because of this, right, or this candle, right, because of this. So we're using 2 scanners every day. At the end of the day, we're scanning to put stocks that are in a momentum phase on your watch list. Okay, 20% plus in a week. Okay, and then you're looking for it to pull back, tight action, and then momentum burst. Okay, and then intraday you're looking for $1 breakouts. That's how you trade momentum. Okay, if your system is telling you that this is a buy for the next day on a follow through, then you don't have a good system. Okay, so this is what we're looking for. This is how you make money. This is how you turn over your account. 10%, 20%, 30% in a few months by taking trades like this. Okay, so if you have any questions, you let me know. You know where to find me on Twitter, Ali_all caps. Join my Discord, subscribe to my Substack, all of those good things. I hope you learned something, and take care and happy trading.